You guys have seen Cathie Wood back into the news. Cathie is known for her ruthless conviction and audacious marketing, and she always grabs the attention of many investors. Recently, Cathie's 40% rate of return prediction draws rebuke after ARK's rough year. The biggest and currently drawing a lot of attention is this new write-up is this innovation stock is not in a bubble. We believe that they are in deep value territory. What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to give you my opinion on some of Cathie's predictions. Well, the first priority of every investor is to invest in that type of company that has the strongest financial background, high upsides, very low credit risk, and they are not affected by their competitors. You guys may be thinking that what are the major benefits of investing in these type of companies? The answer is quite simple. You can get a higher and reliable rate of return on your investment because they have a stable revenue stream. Apple and Microsoft are the best examples of companies. They even have AAA credit ratings, which only 3 companies in the world have. Well, AAA ratings are issued to investment-grade debt that has the highest level of credit worthiness with the strongest capacity to give the return to their investors. If you consider yourself a value investor, then you should only focus on these 2 companies. Some other companies are also succeeding continuously and their chances of failure are almost equal to 0, such as Costco Wholesale Corporation, Disney, Home Depot, and Nike. Almost a year ago, Cathie's performance was really good at the time as she defended the Tesla investment when people were thinking that she is crazy. But she proved everyone wrong who opposed her in that case. Tesla is now among those companies that have a market capitalization of $1 trillion, and Cathie's ARK Innovation was the only fund to bet heavily on Tesla, and she succeeded in it. Now, the major warning for investors, especially the newcomers, are that they only see her successful past and her previous performance, and this is the point where they get distracted. So investors tend to buy these funds at the unfortunate time. And there is a history behind this. For instance, Fidelity's Jerry Tsai, who was one of the famous and successful fund managers in the 1960s, just like Cathie. He attracted a lot of funds inflows. Well, the investors made a huge mistake of buying such funds at the wrong time. Now the question is, what is the unfortunate time? When the investor buys the fund after they had a good performance and then they underperform. During 1968, the fund went through a huge period of underperformance, so the investor bought such funds at a high price and they sold such funds at a low price. After the underperformance started to happen, the asset fell 90% over the next few years in Tsai's funds, so investors immediately started to sell when their fund underperformed. Now, before we go any further, make sure you subscribe to Glory Investing Show and don't forget to hit that bell icon so you never miss any updates. What I want to say is that investors do not get the same return because they buy and sell their funds at the wrong time. And this is the major warning in this video because it looks that this is going to happen again as investors had already started buying funds so heavily at the beginning of the year 2021 at the ARK Innovation ETF, and if Cathie Wood's ARK Innovation underperforms, they will try to sell as soon as possible, and that is a natural behavior of a normal person. So the first few weeks of ARK Innovation ETF was good, and then they started to underperform and even they went to the negative territory. It's not just the return in the ARK Innovation ETF, but also its comparison with the rest of the market. The benchmark for the rest of the market is S&P ETF 500, and this is the index that Warren Buffett said that just buy and hold and forget about everything else. And if you look at the S&P ETF 500 as compared to ARK Innovation ETF, the S&P 500 is up 29.03% from the beginning to the end of the year 2021. This is the great performance, and the ARK Innovation is down to 21.59%, and that made the loss to the benchmark even bigger. ARK investors this year have given significant relative performance. To give this more context, the relative performance of ARK ETF as compared to S&P 500 is negative 39.12%. So the investors in ARK Innovation had given up a 40% gain. Well, you might be thinking that this is the result of this year. What about investors who held that fund for a longer time? If you look at the 3-year period before ARK Innovation really took off, still the performance in those 3 years was worth the amount of risk. It means that you are merely earning 34% in 3 years, and that is only possible if you have the mentality to buy and not sell for that 3-year period. Well, the majority does not want to do that. Basically, from 2015 to 2019, ARK was managing nothing. They only had $1.6 billion assets under their management, and then this went up 5 times from $1.6 billion to $6.7 billion in the year 2020. So with that investment, the investors made a 152.5% return, which was great. However, in 2021, the asset under management of ARK became triple its size to $21.66 billion, and that's why it had a negative 24.9% return. Investors should not watch only those funds that have already performed well, because that has already happened. Instead, they should be looking at the future. Yes, we all know that most of us look in the past and think that the good performance of the fund will go forever. Well, I assume that most investors have not sold out the ARK Innovation ETF and they have bought them for a long period of time, and you have a chance of getting the benefit in the long term. Cathie said in an interview how these companies in which she is investing will rip through with their disruption and innovation. All the giant companies make up to the benchmark. If you look at the holding of the ARK ETF, you can get an idea that how disruptive and innovative these companies are. For instance, Roku Incorporated. But if you look at the product of this company, there is nothing unique and innovative if you compare them with the Apple product that is reliable and innovative. If I talk about the Zoom, which is a video conferencing app, which is good and easy to use, but do you think this company is disruptive and innovative? I think you should rethink, because Microsoft Teams offers the same service, and in some cases it does it in a much better way. There is a plus point which Microsoft company gets, that it has a much better relationship with so many companies, and it can pursue them to introduce Microsoft Teams to their companies and surpass Zoom in a competitive situation. Microsoft company has also rolled out a light version of Microsoft Teams that is more focused on the family. The company has set the price cheaper than the Zoom with better options. You guys judge it yourself that how Zoom can compete with Microsoft. Well, I'm not saying that they are not good companies, yeah they are, but I don't think that this assessment is true that these companies will have 30 to 40% returns over the next 5 years. These companies will have to outperform up to 100 to 200% per year to lift these funds, and that looks almost impossible. I don't think that investors in ARK Innovation will not earn 40% returns in the coming 5 years. One more reason is that normal ETF companies offer many inferior products than that is offered by giant companies such as Apple and Microsoft. Well, that's all for today's video, and thank you for watching it. If you liked it, make sure to give it a thumbs up and share it with your friends. And lastly, if you have not already subscribed to Global Investing Show, subscribe to it and press that bell button so you'll be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these two videos that are appearing on your screen. We'll see you there. Take care and stay tuned.